let's transition to the meat of why we're here. As we talked about the fact that it's a weird time, yet people are going to quickly come to grips with the fact that, hey, business is going to go on. We have to be able to move our country and our businesses forward. We all have to continue to do our jobs. Thought leadership is going to continue to have to happen. Capgemini has traditionally been, as you well know, one of the good thought leaders in the InsurTech space. Ian Campos, who's our guest tonight, is Executive Vice President with Capgemini's of their Financial Services Global Business Unit, and really an expert in that digital transformation and insurance space. So we're really happy to have him here tonight. What's going to happen in terms of the run of show, if you will, I'm going to turn the floor over to Ian in just a second. He has about I think a 12, 15 minute kind of presentation he's going to walk through on some slides from Capgemini about their learnings, where they think the space is going, the disruption that's going to happen, which I think is great material and fascinating stuff from the things I've already seen out of Capgemini. We're then going to pause, and Ian and I are going to have a little bit of a fireside, computer side, whatever you want to call it, chat back and forth about some of the things that came up in there. And then we're going to open it up for Q&A. So do please make sure you're paying attention as we go through. Make sure you look out for the polls when they pop up, and I'll give you a heads up to that. And then make sure you are writing down your questions, because we will get to those at the end of the presentation. So if you have any questions, like I said, you can post them in the group chat. And Ian, I'm going to stop screen sharing now. So now you should be able to go in and take over and share your presentation, and I'll let you take it away.
So let me do that. Well, first and foremost, thank you, Dan. Appreciate being here. And let me just bring up my presentation. Okay. Oops. Sorry, just give me 1 second. I think.
There we go.
Assuming you can see it now.
Yeah.
All right. So first and foremost, thank you for having me here. I'm Ian Campos. I lead the insurance practice for Capgemini. I do recognize some names. So for those who don't know us, we're a technology consulting company, and I work in the financial services division or strategic business unit, and I lead the insurance practice. The insurance practice is about 2,500 people. We are spread across the globe, all the way from, I like to say we lead projects all the way from Sydney in the east to Honolulu in the west, and across all property, casualty, life, and health. And again, it's a team of about 2,500 people who are basically practitioners in the business of insurance. We tend to do a fair bit of consulting work. We do a lot of technology work. We work with both the incumbents, and we have worked with quite a few of the startups, and I've learned quite a bit from doing this. So I want to spend a little bit of time today just sharing our perspective. I'd say it's a little bit more of a personal perspective, and things that I've learned over the last 11, 12 years of deeply focused in the insurance space. And it's been a very interesting time. We've learned a lot, we've done a lot, and come a pretty far distance. But I think from everything I've learned is there's a fair distance to travel, and certainly the InsurTechs and the startups, I should say, have definitely brought a lot more buzz and a lot more energy and a lot more enthusiasm to this marketplace, and certainly have been a catalyst for change. And that. So I would share a bit of a perspective today that is, I'd say, based on a lot of the thought leadership work we do. I'll use a fair bit of material from our World Insurance Report. It's an annual report we do, and we do this over the course of every year, and we've been doing it now for about 12, 13 years. And then we recently started what we call the World InsurTech Report. We've done two versions of it. Started in 2018, which was delivered in 2019, and the results of 2019 are still coming through. So these are done by doing a lot of interviews with executives in the insurance companies, with some direct interviews and polling of consumers in the insurance space, And then also in the World InsurTech report, we do interview a lot of the startups and venture capitalists and get a pretty broad view of it all. So I would basically spend a little bit of time talking through what we've learned, what we're seeing. I'd like to bring it all together. I mean, if I take this back to about 5 years ago, it was always, the incumbent's belief was, the startups are, they come in, they create a fair bit of buzz, they're never really going to scale. It is, essentially, to a certain extent, they're going to be very niche and stay that way. So we really have to keep an eye on them. We really don't have to worry about them too much, was kind of the prevailing attitude. I overgeneralize, obviously, to kind of make a point. But on the flip side, you had the insurtechs that were, as you would expect them to be, pretty energized, coming in with a lot of buzz, and dare I even say a bit of cockiness, and really going to teach the world of insurance how to do insurance, and really completely change it. And the millennials will move over in droves, and insurance is going to be a completely different business from what we really have always known it to be, right? So there was always this interesting dynamic in play. The reality is, 5-6 years later, I think the headline is, both have realized that they can learn a lot from each other. Both have realized that working closer together actually is probably the right answer. And they both bring a lot of complementary skills and complementary strengths to each other. And together, we put them into what we are beginning to call the inventive insurer. So it's really the future insurer, kind of born of incumbents and insurtechs together. So without much ado, I will cover the material. I am going to rush through some of this. We will make the material available to you at the end of the call and the session, so you will have it, and we will certainly share the world reports that I've talked about, and so you can certainly get a handle of the detail behind a lot of the material I covered this afternoon. Okay. All right. So just taking a step back, I think the industry, the insurance industry, I would say very similar to the rest of the financial services industry, is changing at a fairly rapid pace. And that's changing at a fairly rapid pace for what we would call 4 large areas or 4 large factors that are driving this change. One is certainly the new customer expectations, the rise of the millennials, the Gen Ys, the Gen Zs now, or Zs, have grown up in a very digital, in a very mobile, and in a mobile first type world, and they have a very, very different set of expectations than say a Gen X like me, who's been in this business for about 27 years and probably classified as a dinosaur and a fossil by now. But the point is, with the new expectations, they really have, the table has been set by the FANGs, the Facebooks, the Amazons, the Apples, the Netflix, the Googles of the world. And they've set the table, they've set the tone in terms of what customer expectations should be like, the level of response to expect, and really the whole living your life on social media, and the ability to essentially, social media's ability to amplify challenges, as well as be to a certain extent a force for good, and really these expectations have been shaped by the FANGs. We are seeing again, I say new types of risks. Truly, other than cyber, the other 2 have been here for a while, and essentially I mean, we've been dealing with climate change, but it is the severity and the frequency of it is far greater these days, or at least so it seems. And there's a lot more data, and there's a lot more technology today available to track it. We are living in a pandemic right now, and we can see what kind of havoc that wreaks on a society at large, or an economy. Again, we will probably feel the effects of this for some time to come. The primary effect, of course, is the health of and wellness of people and populations, and our thoughts, prayers, hopes go out to those that have been afflicted by this, and those that have survived it and their families surviving it. But pandemics are probably here to stay, And the reality is there's not enough data, enough knowledge about how the world can react to it, and how an interconnected world like we live in today really makes these things spread pretty quickly. Now, we've dealt with, from time immemorial, pandemics have existed, but the rate of transmission and the pace of which it can spread is quite challenging these days. And then you take the overall, the social media that goes with it, the ability to amplify, the impact and the effects of this is significant. So again, insurers, so businesses are having to deal with this. Obviously, has a significant impact on insurance, as particularly in the business insurance space, predominantly, with a lot of our small businesses now needing help and really counting on the insurers for things like business interruption and so on. So again, new types of risks, new technologies. We've talked, I won't go into too much detail. I think everybody knows what these are, but everything today is kind of merging, or the thinking has been really driven from a cloud, digital first, mobile first type mindset. And then last but not the least, there are the insurtechs. We call them the new entrants. They have been around now for a few years. You can argue that startups have always existed. The status quo has always been challenged, but the insurtechs essentially are doing it through combination and smart use of technology, and really technology really being their business at the end of the day, and the insurance aspect of it being kind of the additional emphasis that they bring to it. But they're really predominantly technology first, insurance second, and you can see that it's had a tremendous impact. It's been about $7 billion, I think, in the last 4 or 5 years that has been invested in these insurtechs. And truly, the business is quite different. We do a lot of work, like I said, with incumbents. Today, some of the largest insurance companies in the world, and every one of them has taken this seriously and is looking at what they can learn from the insurtechs to basically improve their overall business model, be it in the form of effectiveness, so risk selection, pricing, etc., or claims indemnity management and so on. In the area of efficiency, so loss adjustment expenses, things like underwriting cycles, and so on and so forth. And then last but not the least, in the whole world of experience, which covers as broad as the experience of insureds, claimants, partners, agent brokers, etc. And then certainly last but not the least, the employees in there, right? So the industry's changed quite a bit. The insurtechs, as we look at them, as we call them, I'll use disruptors, insurtech, startups kind of interchangeably. But really, the insurtechs are all over the incumbents' business, as I'd like to say. And what we really mean by that is no longer are the insurtechs necessarily purely trying to be internet-first insurers or be replacements to the insurers. What they really also started doing is, and have become quite good at, is providing a range of services that span the entire value chain from an insurance perspective. And they're getting good at it. So what we're beginning to see is a lot of funding that the funding that I've talked about in the past. About 50% of that funding has gone towards what we would call new business models, insurers that operate predominantly as internet-first insurers, the likes of Zongan, Lemonade, Metromile, Ladder, etc., and to others that are focused purely on aspects of the value chain. So good examples of those would be in the underwriting space and risk selection space, people like Cytora and others, or others like Shift Technology that does a lot of work in the fraud space, and fraud uses AI to detect fraud, being used a lot by some of the insurers today in identification of fraud. Similarly, things like people like Tractable, which really help in the estimation or video estimation, photo estimation, and bring those capabilities to the claims processing aspects of things. So again, we're seeing a fair bit of investment equally in business models, but also in very specific areas such as value chain improvements and so on. Again, there's a large number of them. I've just picked out a selection. We do a fair bit of work with something called Startup Bootcamp, and these are some of the InsurTech Startup Bootcamp has worked with over the years, and we've continued to work with them, right? Again, in terms of geographically, a lot of these UK, US based insurtechs have reached a degree of maturity. They've reached a degree of being able to actually get everybody else around them to sit up and take notice of what they're doing. We talk about Lemonade, for instance, has the world record fastest claim processed. I think it was what 3.9 seconds or something like that. Again, yes, it was for a $900 Canada Goose jacket. You can afford to get that claim wrong. You probably got a fair bit more publicity out of it than the $900 that you potentially could have written off in terms of fraud. However, the key point there is the technology is able. It was a good demonstrator of capability, and the whole process of receiving the first notice, to doing an estimate, to detecting whether there was fraud or not, and essentially paying it out and making sure that the money was transferred over. All that in about 3.9 seconds is great. Now, it's obviously not something you would do with a workers' comp claim or an injury-involved claim and so on, but for a lot of the simple, straightforward claims, there is really no need to be sending those to an adjuster. The capability is there. So again, what the insurtechs have done is really help the incumbents take notice. They've come at it from an efficiency angle, they've come at it from an experience angle, and then the likes of a Cytora, Science, Flock, etc., are really helping insurers come at things more from an effectiveness, so proper selection of risk, proper pricing of risk, making sure you're paying out claims that you're not paying out a penny more or a penny less, you're paying out fair value and so on. Right, so the phenomenon is not new. It's been around. It has, I would say, to get overall as a whole gain scale, and certainly you've got the insurers sitting up and taking notice of this now. Okay, I talked about US, UK, but it's a global phenomenon. Lots of good insurtechs and lots of good companies doing great things across the world, and we've had an opportunity to work with them as we are quite geographically spread out ourselves. Okay. So the debate, I would, and I alluded to this earlier, the debate in the last about 5-6 years ago, and I paraphrase, I had an opportunity to sit down, listen to a session by Alex Rampel from Andreessen Horowitz, venture capitalists, and very much, I'd say, pioneers in the funding the fintechs. I heard him say, the battle between every startup and an incumbent comes down to whether the startup gets distribution before the incumbent gets innovation. And that's actually quite insightful of him, and it quite well describes the challenge or the debate that has been occurring over the last 5-6 years. What I like to break all that down to is essentially scale versus innovation. The incumbents have scale. In the insurance business, scale is required, and clearly the capital-rich nature of this business, the capital-intensive nature of this business, I should say, the fact that brand matters, trust matters, and you do need a fairly large customer base to be efficient, to be effective, to be able to spread your risk accordingly. And last but not the least, the fact that insurers have gobs and gobs and gobs of data. Same with banks, but insurers in particular. And a lot of it is unstructured. A lot of it is hard to put together. A lot of it is hard to derive insight from, but they do have a lot of that data. The startups, the disruptors, on the other hand, bring a degree of simplicity to their operations. They don't have to deal with the baggage of legacy. They can start greenfield. They can start with a clean slate. So they bring simplicity to it. Their whole business model is driven by empathy, or I call it being empathetic. I'm a consultant, I'm allowed to make up words. And then it's really driven from a very much an agile and innovation mindset. And they have shown the capability of using AI, using machine learning, using tools and technology available today to derive a lot more insight out of data sets that they have available. Now, their biggest challenge is they don't have access to do truly the value, the volumes and volumes of data that make patterns meaningful or could be used to price. They need the insurtechs, the insurers or the incumbents that have the data, but they've actually built a lot of the technology and the capability to do it. So what I really believe it comes down to scale versus innovation, comes down to what is traditionally been the strength of the incumbents versus the new skills and capabilities that the insurtechs bring to the table. So we see this, that, again, One is trying to get scale, the other is trying to get innovation. And up until now, I'd say till about a year and a half ago, maybe two at the most, there was this friction and tension in place. I think that has changed, and we've certainly seen a lot of that come through with our research that we've done in the World Insurance Reports, the World FinTech Reports. What we've seen is that there is a model that is now emerging. That model is what we've been beginning to call the inventive insurer, and it's a model that is really based on partnership and coexist and collaboration. Where we've seen it in a lot of the feedback that we've got when we've done the consumer polls as part of the World Insurance Report, about 50% of the people that we polled globally, customers tend to show they have a higher likeliness to stay with their existing insurer. They like the brand, they like the longevity they probably had with them, but they do want to be able to be served better, and therefore essentially have shown a degree of likeliness to stay so long as the insurer provides some of these value added services. And they can come in the form of usage-based pricing, the ability to help them focus on prevention rather than protection or payment, so to speak, or restoration, and then and bringing ecosystems of the networks that insurers have together to benefit the insurers in the form of even when they don't need insurance. So can I take my vehicle to a repair network that you have an agreement with, and just by being one of your policyholders be able to get some kind of savings through it? So monetizing your restoration network, so to speak, as an example. Similarly, the InsurTechs and various external partners, and again, we talk about InsurTechs, but you could put the providers of information technology and the information services in the likes of LexisNexis, etc., the tractables and so on. They're all part of this ecosystem, and they provide a lot more of these value-added services and can do it in a much cleaner and quicker way, and don't really have that baggage of legacy to deal with, so long as they can truly integrate into the ecosystem and the value chain of an existing insurer. We've seen obviously distribution power for a lot of the InsurTechs, and particularly the ones that are internet first based approaches. They can be, and then a lot of the price comparison websites or the aggregators, they have the ability to bundle and to distribute, and therefore really take on products and services from an existing insurer and put their own label on it and be able to push it out in a more innovative, quicker, and bundled fashion, right? So a lot of our research is saying most people are highly likely to stay, and about 58% actually like the value-added services and like the innovation that are being brought together by the InsurTechs and the disruptors, so to speak. So in an ideal scenario, they would love to have the benefit of both, which again is going back to what we need to call the inventive insurer, right? Again, at this point, collaboration is key. This is something we have seen from our World InsurTech report. We've got a view of policy, the way P&C insurers, life insurers, health insurers are looking at it. The interesting thing is, if you look at the top three for each, the composition changes a little bit, but the top three really are where the incumbent insurers are really looking at the fintechs and the disruptors predominantly as providers of solutions, and providers of solutions quicker, faster, better than they could do it themselves, given the scale and the size of their current operations, and that probably the technology and the technology landscape that they deal with, right? So again, a majority of the insurers believing that the InsurTechs can provide, they see them in that solution space. They see them as providers of platforms and value-added services. And what we're really beginning to see on the flip side with the InsurTechs is that they're beginning to realize this: they don't have to be an insurer. They don't have to take on all the challenges that come with the need for capital, the regulatory aspects of being regulated by an insurer, as an insurer by the various departments of insurance, etc. And they can actually grow their businesses just by being providers of services in very specific targeted areas, and again, has been predominantly so far in the distribution space, but essentially what we're beginning to see now is in very specific aspects of the value chain. So the InsurTech's also becoming smarter to this, and at the end of the day, they do need to get to scale, and the ability of, rather than trying to build up all of this themselves, they partner with incumbent, not a single incumbent, but pretty much with every large incumbent out there. They can get to that scale quickly enough. So they're beginning to see as providers of platforms and value-added services. That's not to say that a Lemonade is not here to stay, or a Trove is not here to stay. Actually, it's a good example. Trove and it is now beginning to open up their platform to insurers who probably want to set up operations, or to very well capitalized groups or individuals wanting to come into this market and set up very niche solutions, and they can use Trove's platform as a platform for white labeling and so on. We see this a little bit more in Europe. Banks and even car companies, or I should say more specifically leasing and financial services subsidiaries of car companies like Mercedes-Benz Financial Services, BMW Financial Services, Toyota Financial Services, etc., have, or even Peugeot, Citroën, have fairly large financing arms and in some cases banks. And essentially within that, they also have insurance companies, and then they're using these types of platforms to provide these services. So again, collaboration is key, but collaboration is also difficult. There are differences in scale, there are differences in cultural fit, there's differences in the pace at which we can operate, and again, the ability to be integrated into an existing ecosystem. So, but again, these can be handled, they can be managed, and therefore, it's very important to assess both the InsurTech and the insurer to find the right fit. Okay, last slide for me is what we've really begun to see is the InsurTechs are now beginning to move from disruptors to essentially the ecosystems enablers. They are becoming the catalyst for change in this industry, and I'd say that's a good thing. Where we see this headed, and is that essentially they're becoming more of the innovation and the R&D hub for the industry. What they're discovering, what they're learning, they're making available. They're being pretty open about it. They're plugging into the existing ecosystem rather than trying to completely change it and take it over. And what we are seeing is that the entire market, particularly from the perspective of the insured, the agent broker, or the consumer, so to speak, is quite positive. And from an insurer's perspective too, and particularly those that have embraced this and becoming what we call the inventive insurer, which we treat as a North Star, they are seeing that they can deliver on their effectiveness, they can deliver on their efficiency, and they can deliver on their experience dimensions. Okay, I do know I've covered a lot. I've covered it quick, but I did want to give you a little bit of what we are seeing emerging. It's actually quite exciting. And again, we're all learning from them, and it's really coming back down to bringing that digital first, that mobile first, that data first mindset to it all, and truly operating in that fashion. Okay, would love to hear your perspectives. Would love to hear what you're seeing. Again, I learn as much from these sessions as probably more from these sessions than anybody else. So. Open to thoughts and comments.
Well, Ian, that's great. I know people are doing the silent round of applause, even though you can't see them. But thank you for that background. We're going to try to. You and I are going to have a little bit of a conversation. Then we are going to open it up for questions for people who are out there. We're going to see if we can launch our first poll. So Ashley was working on this one. Try launching it again. And Ian, if you want to stop your screen share, maybe we can't do polls while you're screen sharing. All right, okay. So try it again, Ashley, now that we've stopped the screen share, and see if that will populate. We were able to make this work last night, but if we can't, that is okay. As she's working on that, Ashley, if you can get it to go ahead and try it, and if not, we'll move on. The first question I want to ask is that the ending slide you had in the comment of this evolution of InsurTechs moving from disruptor and the enemy to I'll call it a critical part of the ecosystem and innovation. How is that new? Do you think in big insurance companies' minds? Do you think that's been there for a while? Oh, great. There's the first question. You can go ahead and answer that as Ian responds to that. So do you think that's been going for a while, or is that a new phenomenon?
I think it's been in the back of everybody's mind for a while. It's been growing for a while. I think it's been, we all have our own biases to a certain extent.
Yeah.
As a young buck, I thought my father knew nothing. Today he knows everything. I realized I'd learn a lot from him. And then nobody's ever accused me of being a disruptor in the sense that we've been talking about it. But the truth is, I think there's come to a realization that they don't have the baggage of legacy, so they have the ability to make changes, to fail fast forward, so to speak, and to learn from it quicker than the incumbent can actually operate, right? So, and I think as they've tried to become far more relevant, as they've tried to go and capture market, they've realized it's hard to do. And I think there's that realization, but that they have the richness and goodness of what they bring to the table. And I've realized that this can actually be put to use in a very different way.
Yeah.
So the example of a Trove, I mean, they are an MGA. At the end of the day, they're truly not an insurer, so to speak, but in the truest sense of it. But they've realized that distribution is hard, but they've got value in a platform, particularly for an incumbent that doesn't want to spend years and years rebuilding what they've got and migrating to it. They could be used.
Yeah. Well, actually, I saw the second poll popped up there with 2 additional questions that hopefully you answer. It does have a timer on it, so you can time out if you don't answer. But if you all want to go ahead and answer those, I'm curious to see the audience's reaction. We did try and pull some information from your presentation as you were going to create those poll questions. So, Ashley, whenever you are ready, if you want to feed up the results of poll number 1, you may have to wait until that closes, but when you're ready, just go ahead and serve up the results, and then Ian and I can talk a little bit about that. The other thing that I wanted to mention, I know we said we're going to focus more in this conversation about the macro trends versus the immediacy of the COVID-19 crisis we're in, but just talk for a second about what you're seeing your clients talk about. I realize this evolves day by day. Where do you think insurance companies' heads are at this moment that we're speaking right now?
I'd start with saying, does the health, the personal loss, that impact aside, and it's a terrible situation from that perspective. What's happening to whole populations, and so that fully understood, and take that in context, and let's keep that aside for a second. It has brought a lot of uncertainty in the marketplace, and typically in times of uncertainty, you are seeing that people hunker down. They try to just do what is essential, and we tend to see a degree of investment drying up to a certain extent, or preserving cash because we just don't know what's coming. We are in the business of helping insurers transform, and we're in the middle of a lot of transformation programs. We're in the process of starting some fairly large 5-year roadmaps with some large clients. I'm happy to report that most of them at this point in time believe those are mission critical. They believe that it needs to be done. This is yet another uncertainty or that has kind of added to the complexity of what they're doing.
No one's freaked out. They're not changing long-term strategies by this yet. Yeah,
no, I don't see that. But again, it's early days. We don't know how long this is, and the reality is there's really not too much data truly out there. Yeah. What I suspect is happening is that you will see, just like I think Hurricane Andrew in the early 90s kind of gave birth to RMS, because there wasn't good catastrophe modeling and weather-related modeling data available. You will see that today with COVID-19, there is a lot of data available, how the disease started, where it spread, and so on. And I think that, through the WHO or others, it'll all come together, and provide some real good insight and probably better prepare us for the next pandemic to come, or rather prevent the next pandemic from happening and keep it at an epidemic level to a certain extent. But I think clients are certainly worried. They're certainly concerned, but I haven't seen anything truly shutting down that is mission critical.
Yeah.
So that gives me a degree of comfort. Now, it'll have an impact on discretionary spending, no doubt. We are all learning new things. Me inviting you into my home and having to clean up my office, so my wife's quite happy about
This is the cleanest your office has ever looked, right?
Yes, exactly. So
Ashley's trying to push out our poll results. We may not be able to do that. That's why I'm checking on that as we go. But I'm going to go ahead, and folks that are in the audience, hopefully you have questions and you've been listening as we've been going along. If you go down to the bottom where it says participants and you click on that icon, it'll pop up a box. In that box, it will not only show you all the participants, there'll be a little button there that says raise hand. I'm going to raise mine for a second so you can see it. It raises a little blue hand. If you want to go ahead and do that, you kind of pop up the top of the list, and then I can come up with and ask the questions of Ian as well. We'll unmute you and allow you to ask a question. Anyone out there have a question for Ian or a comment on the discussion? Anytime you can go ahead and raise your hands, and then we can jump in there. But I'm going to keep asking a couple more questions of Ian as we go through. So the conversation you talked about, the different segments of the disruption. I think there were 5 different categories. That was actually one of our poll questions. I mean, do you have an opinion of those about where you see the bulk of the effort? I mean, I know you listed all 5 as disruptors. But do you think one's more important than the other? Do you see one being more dominant than the other? Do you have an opinion on that?
I think that definitely is still one area that tends to be more dominant than others, and that's predominantly been in the distribution space, and that's also across all segments, so property, casualty, and life and health. You see a lot more insurtechs in the focused on distribution and distribution platforms. Again, my belief and my thinking around a lot of that and discussions with insurtechs and clients is that's a little bit more of the accessible part of the market. It's a little bit more easier because in that process you're doing a lot of information and data gathering and submission, and then all the heavy lifting and the heavy pieces of whether risk selection, underwriting, pricing, etc. All that happens on the back end of an insurer. Similarly, the claims processing happens on the back end of the insurer, whereas the first notice of loss can be provided by these platforms. So there's a fair bit that you see that are focused on the experience and the interaction, while the actual processing is in the back end. Now, that has been, by and large, the area we've seen a lot more of the concentration in. But more and more, and I think going back to some of the slides, we see a lot of funding now in very specific areas of the value chain. So fraud and underwriting and risk, claims processing and things like that. The tractables, the insurtechs are going after very specific niches. But by and large, it's distribution that has the biggest play even today. Yeah.
Well, we have our first question there. So Ashley, hopefully you are there. So Srinivasan Van Mali, who goes by Mali, has a question, and then we'll go to Pradeep after that. So Ashley, if you could, I think, you've been unmuted. So Mali, you can turn your video on too if you want. You don't have to, but we'd love to see you. I'll go ahead and ask your question of Ian. Remember to keep it kind of compact and focused. Thanks.
Yeah, sure. I don't want to turn on my video. I don't know what will happen to my bandwidth. So
all right.
The question is, what is the in the insurtech industry, where does cyber liability insurance related technology come into play, and are there any companies that are playing in the space?
Cyber liability insurance, I think there are a few that have been targeting this space, but predominantly, if you take a step back and think about cyber, the frequency of occurrence you hope is not too much, but the severity of impact is significant. So we don't see as many in that space, but we do see people that are looking at bringing patterns together, looking at partnering with the likes. I'm so sorry. Challenger working from
New
home.
world, everybody.
Yes. My apologies. We're beginning to see the likes of others partnering with the likes of the Symantec services and Symantec and so on that are monitoring these various threat events across the globe. What we're also seeing is insurers are partnering up with services companies that can run SOCs or security operation centers on their behalf. Symantec Services is a good example of that. Accenture's kind of made a play and acquired them. We're beginning to see that they are thinking about, as they underwrite cyber risk, they're also wanting to be partnered up as an insurer with essentially a company that can, or a service provider that can provide the SOC monitoring, prevention, and restoration capabilities. And we're seeing that come together as more and more packages, right? If you take a step back, that does require you to be fairly strong on a balance sheet on both as an insurer as well as an operational services provider, because the liability is significant on that. And we don't see too many insurtechs at least in that space, other than providing certain services around pattern recognition, AI, etc. So again, slightly longer-winded answer. I don't have one or two specific examples to give you, but this is an area that we call it's an emerging risk, right? And people are beginning to understand it better and put together services around it.
The one thing I would say too, we learned, since we have a group, we're kind of learning how to facilitate this group. I mentioned you all at the bottom have a little chat button, the little bubble icon. If you have an answer, or you have a specific company that you know of that would answer kind of Molly's question, please put it out in the group discussion for everyone. That group Slack is a great way of participating back and forth without having to interrupt the conversation. But if you know of some company names, go ahead and throw that out there. I think next, and so Molly, thank you for that question, the participation. I think next we're going to move to Pradeep. I think Ashley just unmuted you and unvideoed you, or turned your video on. So there you are. So go ahead and ask your question, please.
Thank you. Ian, thank you for your insights on insurtechs and your data points on how incumbent and insurtechs coming together could be a deadly combination. As we work from home, I'm asking this question from a secret hideout from my son, but he sneaked out and he told me to ask you a question. So a question coming from a 2-year-old son. The scale problem of insurtech, is it because of they playing in only specifically in distribution, or is global operational model is something that is not letting the insurtechs play at a larger scale? Can an insurtech become an incumbent in near future? Wanted to know your thoughts on that.
I'd say absolutely yes. I mean, if you let's go back a few years, right? I mean, we talk about startups as though it's a new phenomenon. Progressive was a startup at one point in time, and Progressive believes it's a technology company that is in the business of insurance. If you look at the way they operate, they very much had that mindset. A lot of the characteristics you see in today's startups, today's insurtechs and disruptors, so to speak. You would classify Progressive as an incumbent today, and a fairly large one. We see that, but they don't sit still. I mean, they are also constantly evolving. They're constantly working towards learning that. So that I don't think it's a question of whether scale obviously will be insurtechs that will scale, but it did take Amazon quite a few years to get to a Walmart scale. But Walmart learned as much from Amazon as Amazon has probably learned from Walmart, and they both coexist today. In the process, of course, there's been a number of the others that have kind of fallen by the wayside. So yes, some of these insurtechs from today will be the incumbents of tomorrow, but don't count out the incumbents learning as much and continuing to innovate and being that.
You made a quote, which you didn't use this time, but when we talked earlier, that the ability for the big companies to innovate is going to be faster, right, than the ability of small companies to scale, which really resonated with me when you said that. Because do you think that the smaller innovative companies, if they really do come up with something, do you think they will get acquired by the big companies? Do you think that's how it's going to happen, or do you think they'll try and develop on their own? Do you see any trend lines there?
We do see. I mean, and I think this is the consultant in me that's going to say.
You want to draw a 2x2 box on the screen?
The other thing I'm learning, the sun sets to my left. But yes, so the incumbents are learning. Ability of incumbents to learn to innovate is quicker, and in many ways they can buy that innovation, and that's what you're saying. That I've talked about the InsurTechs being the R&D and the innovation hub for the industry as a whole. The other aspect is a fair number of the incumbents do acquire the InsurTechs or do acquire the disruptors and use them as an internal catalyst. I think one of the best examples of that might be Esure and Allstate, where Esure is like born online is their tagline. They talk a lot about technology as being the business that they're in, and Allstate effectively using them to counter some of the moves that are made by direct insurers like Geico and Progressive quite well. At the same time, using Esure as a catalyst for Allstate's overall transformation. Now, this is this personal perspective. I haven't spent time at Allstate today, but this is from observing, seeing some of the moves in the marketplace. Similarly, I don't know if anybody remembers a company called LearnVest in the life space. Wealth management, financial planning. They help you do a financial plan and then put all your income protection and legacy needs in there, and help you decide what you needed and help you buy. Today, LearnVest is owned by Northwestern Mutual, which is one of the largest life insurance companies who I did a lot of business with personally. And my agent would never do anything on digital, would always do it on paper, and ask him, why would you do this? And he goes, no, it's our way of doing things. And today we have video conferences. And so they're beginning to learn from the likes of a LearnVest. Yeah. So yes, some will get acquired, some will get scale, some will fall away, but more and more we're saying most will partner and collaborate with more than one and be that the niche player, but to a much broader number of carriers than try and get this done themselves.
It's interesting. I spend more of my time in the InsurTech younger company world, and I think you get an opportunity to spend more time with the later stage, and we tell them the same thing. They're always kind of worried about, well, isn't some big insurance company going to steal my idea? And I'm like, no, they would much rather, if you have a solid platform and a really good user experience, they would much rather partner or acquire you than try and compete. We're almost out of time, and so I want to see if you can, Ashley, whenever you're ready, you can kind of serve up our last poll, which is kind of our exit poll. But as she does that, and we give people an opportunity to take that poll, Ian, I wanted to ask you kind of a last kind of wrap-up question for us. And if you were going to give people advice that are on the live cast now or are going to listen to this later, what do you think? What do you think are the things people ought to be watching out for? What are the trend lines that you think over the next year people should be looking and see if you see a bip up on them? Are there certain things that you are personally keeping an eye on over the next 12 months?
I'd say again, I think do not be dismissive, right? I mean, and I personally probably have been a little bit guilty of that myself. Working with the incumbents to a large extent, these guys are just in a very small, they're small, they're not going to be able to scale and get to us. Do not be dismissive, because they're learning, and they're learning fast. And if they're not partnering with you, they're partnering with somebody like you. So as you look as an incumbent to protect your market share, to continue to be relevant to your customers who are expecting a lot more, they can help. As an InsurTech or as a startup and a disruptor, don't assume that it's easy. The ability to do certain things in a petri dish is one. To be able to do it across a much broader ecosystem is a completely different challenge. And yes, you're going to have to learn to partner. You're going to have to learn to collaborate. be open. I mean, you've always started with this open mindset. Continue to be open. The possibilities are limitless. If I told anybody I planned my life, I'd be lying. I've just seen opportunities come and smack me in the face, and then I've grabbed them with both hands. So I think it's at the end of the day, be open to the possibility. It'll lead to great places.
Yeah.
And if anything else, you'll learn from it.
That's a great advice. Be open to the possibilities. Grab them when you can. I think those are good kind of words of wisdom for us to end on. Oh, great! And we got actually some feedback on that from our last survey, and they will push the responses out, which was great. So really good instant feedback for you, Ian. There's how you did, and also kind of how the technology worked and whether the virtual meetup worked. That's fantastic, and appreciate you all participating in the polling and being here with us this evening. As I said, this is kind of a new normal for us. We're getting a feel for how to do this, how to make it as interactive as possible, how to engage an audience, which of course is much harder virtually, especially when you have large groups of people. But I thought this format worked really well. You have the content, a little discussion, some open Q&A, some polls intermixed. We will be posting this online, so if you enjoyed the conversation, you can talk to other people about it, and please do watch for other community meetups from the QCInsurtech community. And if you're on Twitter, make sure you follow the QC Insurance Twitter account, because that's where we'll push out a lot of these events. But Ian, really appreciate you spending the time with us tonight, especially because in all this craziness, we all have focuses in for a little while on what's happening in the space. It's been a wonderful conversation, and we really look forward to seeing you and hearing from you again soon. So thank you for taking the time.
Likewise, thank you for having me on. I really do appreciate it, and hopefully we can do this in person and over a drink at some point. But looking forward to that day eagerly. Thank you very much.
Enjoy your evening, everyone, and keep an eye out for more meetups coming. Thanks so much. We'll see you soon.
Thank you. Bye-bye.